Hey traders, so let's do a top-down analysis together. And in this one, I'm going to try and establish some rules in just show you some ways of kind of deciphering which trades to take, which ones to avoid, right? Now, let me just make this very clear. There are no really hard and fast rules when it comes to trading. There are absolutely none. How we establish these rules is just through arriving at some sort of a conclusion just purely based off observation. Now, if you observe something and then you're able to replicate that observation throughout the year a number of times, that's when you can start to say that this is when I see this, this is generally what tends to happen. Right? Now, with top-down analysis, let me show you this. So you guys are probably familiar with, let me just get rid of all of this. You guys are probably familiar with these sorts of questions that I think tend to come up more in IQ tests, where you have a series of numbers and then the question says, what's the next number in the sequence? Okay? Now, the idea when it comes to top-down analysis is exactly the same thing. What we're trying to find is the relationship in where price is and what it's doing from the daily chart to the 4-hourly to the hourly to the 15-minute chart. Now, for most of you, you can probably choose between the hourly and the 4-hourly. You don't have to do both of them. If you want to do both of them, certainly go for it. But the idea is to see some sort of a relationship that exists within that. And the simplest way I can put it is that you want to be able to say that the story that you're looking at, it continues. That storyline continues from the daily chart down to the 15-minute chart. And the beautiful part about this is what you're seeing on the daily chart, and so your recognition, the prediction that you're making, will most likely now take anywhere from a couple of hours to possibly 12 to maybe a full 24 hours to set up by the time it gets to the 15-minute chart where your entry might be. Okay, so here's where something that you've observed that's very familiar to you, and you can say, now I've got a whole heap of time to be able to look for something that I'm expecting, right? So in the lower time frames, that's when, like the hourly chart and the 15-minute chart, that's where you probably would have drawn in your Fibonacci, right? So you're probably looking at a 618, a 50, or a 382 hit, an area. Possibly you've put in a support and resistance or created a support and resistance zone somewhere there. And so you're looking, and that becomes your kill zone. So you're waiting for price, whatever it's doing on the hourly chart, the daily chart, to come back and start doing that on the hourly and the 15-minute chart. And then straight after that, remember, just because it's coming and hitting that area doesn't necessarily mean it's an entry. It basically just means you have called something that's very familiar to you. Now you want the market to do exactly what it is that you need it to do, I should say, to say to you that yes, this is now confirmed. There's going to be a trend bias. This market's moving. For me, it's usually a completion of a double top, double bottom formation. Also, a evening star, morning star engulfing candle happening, possibly within the first 3 hours of that session. Why the first 3 hours? Because usually all of the economic data releases tend to happen in the first 3 hours of every session. Okay? So, and you could go into investing.com and forexfactory.com and look at the calendar and take note of whatever major news release that's happening within that time period. If there is something there, wait for it, right? Wait for it. Wait for the market to give you a morning star, evening star, or engulfing candle because of the news release. And then that's your, okay, this is, good news or bad news. That's enough for me to ride this wave along with the institutions, something along those lines. Okay? So, by the way, for those of you that would like to know, I think the answer to that, the next number is 19. Okay, so let's have a quick look at this. This is one of the trades that I did do this month. Right now, with going through my analysis for the year, there were times when I missed trades because I wasn't in front of the computer. note all of them down. It's not a bad thing. You've called the trades, fantastic. But also there are chunks within there, like the first quarter of this year, and also especially going in from the middle of October onwards. There are very few trades that we could have taken. Within November, there's only three trades that I've taken, right? So I'm going to talk to you about this one. Now, this line is the 31st of October. Now, within the open of November, we see an evening star pattern. We've got our resistance zone, market hits it, comes back down, goes back up, hits it again. Now, first thing we're looking at is to say, well, this is nowhere near our EMA 200 or EMA 50, right? Note that down somewhere. Second thing is to say, well, this is now still at a clear resistance area. Okay, fantastic. If we were to see this as a double top formation, where would this go? Right? So we might say, well, what's the nearest areas? We could look at this area here, right? We could say, okay, this price could actually come down here. We've got a support area here as well, and that, if we look across, most likely was drawn in because of the bodies of these lines here, this candle, sorry, and then the wick of this one. So that creates a support zone. And we could say, well, if price does break past this area here, it probably might come down to this area. And look at this. It does bounce off here, gives us an engulfing candle, and then moves back up again, right? So we could say, okay, from here to here, how many pips are we looking at? Right, straight down to there, it's about 60. Down to this area here is about 100. Now, when we're looking at that, we could say, okay, here's an evening star pattern formation, and so we now have a potential short. It doesn't necessarily mean you see it, jump in there. If you did, look at the wick on this thing here on the next candle. Let me zoom in a little bit. This next candle, the open, the wick on that is 36 pips. If you would have taken your entry on the daily chart, how big would your stop loss have been? Right, so consider that. Now, as we see this, here's what I want you to do. Right, now when you're looking at this in real time, you won't have to do this, but I'm doing it now because we're looking at charts in the past. So I'm going to just drop that line there, and I'm going to change the color of this. Let's make this blue. Right, so we've got now this vertical line. We're going to go back now onto, and for those of you that do want to do a 4-hourly chart, certainly do that. Just quickly, before we jump into the 4-hourly chart, remember, here's my thought pattern. We're looking at what price has done. We've got something that's familiar to us. We recognize it now. Double top formation and a evening star pattern. Two things. What I'm not happy with is that it's nowhere near my EMA, right? So when it's not EMA, I'm looking to see where the EMA 200 is. I'm looking to see where the EMA 50 is. 50 is still below the 200 at this mark, right? And now I'm looking to see, remember, where has price come from? What the hell has it done previously? So I go back down now. I'm looking at what it's done throughout October. We've got this high, and then we've got what looks like a massive double bottom at the EMA 50 early October. My question is, what the hell caused that to happen? Was there a fundamental news release? Something caused the pound to strengthen against the US dollar, right? What was that? Now, if it's something that is big, has the potential of continuing to strengthen the economy, then you can't really say, well, hey, that's enough to short the crap out of this and it's going to find its way back down there again, right? Just be mindful of that. But if you see now that we're looking at and we're thinking, okay, is there any Elliott wave structure? First wave, maybe second wave, maybe third wave, fourth wave, and we get no fifth wave, right? And we can say, okay, price hits a low here, we got a nice wick to the low here, and then a massive engulfing candle, price kept moving up. So what I might consider at this stage is to say, okay, I've got a few things. We've got maybe 3 confluence points, double top, resistance area, evening star pattern. We know where price may come down to. Now, this yellow line is my EMA 18. Most of you have been asking me about this because I hardly ever talk about it. How I use it is when I'm taking a entry, my EMA 18 really does work nicely in regards to the pullback. If pullback happens, price comes and hits my EMA 18, I'm like, beautiful, I'll take it. The other way I trade this is to say that when I'm actually looking for a take profit area, chances are that when I take my entry, the first take profit may be at my EMA 18. A lot of people kind of aim for the 200, the 50, or some sort of structure. I find that my EMA 18 usually comes before everything else, right? So if it does, then I might consider getting the hell out of there as price has hit that. So just be mindful of that. So I'd be thinking if this price is going to continue going up, chances are it's going to come down, hit either this, either that, my support area, or potentially it might make its way back down to the EMA 50. Notice that it hasn't so far, so please don't assume. Just put this down as a possibility. Okay. Now, when you've got this overall picture, jump onto the lower time frame. Then look to see what the market's doing. Now, as soon as I look at this, it's a bit of a no-no for me. Why? Because this day has opened up at my EMA 50, right? So we're looking at this and thinking, okay, overall structure, markets come back up. We've got this low. This whole area here is still within the inside structure of all of this. So usually we'd say when something is within an inside structure, we want it to break out of there, right? So break out of above here or break out of below here, and then give us some indication where the hell this is going. So the first thing again, after I look at that, let me get rid of this and zoom out again, is that this is at the EMA 50. Remember, our EMAs are our dynamic support and resistance areas, right? So we're very, very wary about that. So straight away, I'd probably think, okay, the story that I'm being dealt on the daily and the 4-hourly chart do not match up, right? This is not saying to me that the EMAs are up here and this is coming to bounce off the EMA and fall. So as much as there's no EMA here, I'm still looking for them in the lower time frames. Okay, so now I'll jump onto the 1-hour chart. Let's see what the blue line's doing on the 1-hour chart. Again, now this is another biggie. So this is the EMA 200 on the 1-hour chart. That's where the day started. It's now kind of consolidating on the line. Couple of things we could do. First thing is we could jump straight onto the 15-minute chart and see what the hell the blue line is doing there, right? And we say now all the way down to the 15-minute chart is when we say, okay, we've got a cross of the 50 and the 200, and price is below our 50 and the 200. We like seeing that, right? But remember, the 4-hour chart and the 1-hour chart isn't telling us the same story as the daily or the 15-minute at this stage. Remember, because what we're looking for is these lines, we want price to be below these lines in all of the charts across the board, right? So I go back onto the 1-hour chart and I'll say, let me just drop a line here. Now, for those of you that have the EMA 800 or 3200 or something along those lines on your charts, on a 15-minute chart, you should actually see the EMA 800 somewhere around here, right? Because that is the 1-hour chart on the, sorry, that's the EMA 200 on the 1-hour chart, right? Now, I've dropped a line on the EMA 200 on the 1-hour chart, right? It's a horizontal line. So when I come back onto the 15-minute chart, here's what I'm looking at. I'm looking at price. It's consolidating where the EMA 200 is on the 1-hour chart. Now, in my head, again, this is where top-down analysis is extremely important. We're not looking for what you're hoping the market will do. We're looking to see what the market may do because of whatever indications it's giving us. The daily chart is giving us a evening star pattern at a resistance area. The 4-hour chart is showing us that price is sitting on the EMA 50, which is most likely going to bounce up because that's what we believe it to do. On the 1 hour chart, price is telling us that price here is sitting on the EMA 200. What are we expecting it to do? We're expecting it to bounce back up again, right? And then we come onto the 15-minute chart and it says to us, well, yeah, this is what we normally want to trade, where price is below, it comes back, hits this. We're looking for some sort of confluence with the Fibonacci tool, give it some structure like this. Here's a double top formation. We want it to go down. Why the hell doesn't it do what we want it to do? That's because the 1 hour chart has got a dynamic support area in the way of this white line, which is the EMA 200. If you see that on a 1 hour chart or a 4 hour chart, note that down, that this is a brick wall that the price is most likely going to bounce off. And so that should be enough for you to say, I'm going to sit and watch this, because if price hits this brick wall, which it did in this case, right, and then goes up, you can avoid that whole entire mishap just by paying attention to what the 4 hourly and the 1 hourly is doing, right? This whole example wasn't there to show you, hey, here's a perfect trade, take it. The whole point of this video is to say, here's the sequence of events that you've got to follow, and if any of those events don't line up, you've got to be prepared to say, I'm going to walk away from this. Okay, guys, this is a business. This is like a chess game. You are now the prime strategist for your company, which is you against the markets, and you're in the driver's seat. You've got to be making these decisions. Don't be afraid to say no to a bad setup when nothing lines up, and don't be afraid to say yes when everything's lining up. Okay, I hope that makes sense. If you've got questions, please just post them below this video, and I'll come back and I'll answer them so everyone can benefit. All right, over and out.